Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of September the 3rd, 2018. Now, just to get started, we're going to look at the dollar index where we always do first because, again, it's so important in our Forex trading, commodity trading, and equity trading that we're looking at where the dollar is in its current cycle. Now, we've had a big push up to the 96.80 mark, but we have heavy support forming now on the dollar. That coming in at or about the 94.34 area, very similar area to where I talked about last week. Now, our indicators from VantagePoint are absolutely turning positive on the dollar, but we must break through 95.16, the VantagePoint long-term crossover pivot area. Now, if we can break through 95.16, stay above that area, we should be able to return back towards the range top at or about the 96.90 area. Now, a very data-intensive week here. Non-farm payroll on Friday, the ADP report on Wednesday or Thursday, I believe, of this week. So it's going to be a busy week, but the indicators from VantagePoint are pointing towards additional dollar strength. Now, not surprisingly, gold, again, cannot break through this resistance zone between 1220 and 1230. This is an absolutely critical zone for gold to break free of. But the VantagePoint indicators are already rolling over to the short side on gold after the failure at this known verified resistance zone. So for gold, it will be very difficult for gold to make any substantial gains next week unless we get a very poor unemployment report. Now, as we look at our oil prices for next week, they continue to push higher. We've broken free of this support zone down at 63.50, but again, we have an early warning sign that we could see oil prices weakening this coming week or the following week. Now, the medium term crossing the long-term predicted difference. The good thing here, guys, is the neural index is not confirming the move lower just yet, but be very careful of a bull trap up in this verified resistance zone between 72.50 and the $70 a barrel mark. Now, as we come into the equity markets this week, again, we've got a double top forming here at about the, I'm not going to say about, at exactly the 29.17 area. Now, the medium term crossing the long term predicted difference. However, this time the neural index does match. So when we look at this overbought condition, we've got to work this off. If the equities are going to push higher, we need to break free of this overbought condition here. A retest down at the key VantagePoint level to 28.69 is very, very likely here. If we can't hold that area at 28.69, we go lower. We could go substantially lower. We've seen this before. Every time we've put a new high, a new top in, we've moved down by at least 30 or 40 points here, guys. So be very cautious with the equity markets going into next week. Now, as we look at the Euro-US currency pair, once again, very much like what I warned everybody in last week's Outlook, that we've got a verified resistance zone between the 118.80 mark and, again, this 117.50. Only a sustained break of both of these areas will take the pressure off the downside. Now, we're holding the critical vantage point level, 115.86, but we are not out of the woods yet here by a long shot. Going into normal at the first week of the new month, the dollar usually strengthens, and this month doesn't appear to be any different here. So with that dollar strength comes euro weakness. Now, we could have some opportunity for a reversal point on the US Swiss franc, but with the US Swiss franc going lower, I believe the VantagePoint software is picking up on that double top on the equity markets. US Swiss franc will follow the dollar index for the most part, but also very sensitive to equity market moves. So be careful of this one next week. It is likely to take its lead off of Euro US, however. Now, with the British pound for next week, it's very important that we're identifying these resistance zones. 130.70 approximately. If we look at this area right now, it's coming in about, let me correct that, about 130.40, 130.32. Unable to break that. We've had a big push up after that positive Brexit news, but we've had absolutely no follow through. This is 100% headline driven. Regardless of Brexit, I believe the British pound will still come under a little bit more selling pressure because of a known period of dollar strength. So try not to forget that. It's very, very likely that we're going to come down and test 129.01. But again, the medium term crossing the long-term predicted difference with the neural index in a heavily overbought condition. Not a surprise we're moving lower, but once again, we've got very, very strong support here that's coming in around 128. So right now, the current range we're dealing with is 128, approximately 128.80, and the top side being that 130.70 mark. Only we need a break out of this zone, but if the pound dollar is going to make any substantial gains to the upside, in my respectful opinion, we must break through 131.80, and I'm not sure next week we're going to be able to do that. Now, as we look at the dollar yen this coming week here, once again, guys, we have a verified resistance zone between 113.25 and 112.15. We approach this area this week, as you can see, and immediately the sellers stepped right back in. We have the medium term crossing the long-term predicted difference with the neural index, and again, you know, this is basically when we look at these verified resistance zones and compare that with the VantagePoint indicators. Again, if we look at our short-term crossover with the medium-term crossing the long-term predicted difference, and of course, a very, very important that neural index. It's pointing towards a move lower. So once again, guys, be very cautious with stocks next week, because in most cases, if dollar yen is moving lower, so is the S&P 500. Now, as we move into our main three commodity currencies here, once again, with the US-Canadian pair, NAFTA, this is basically a headline-driven currency pair right now. We do have the Bank of Canada on Wednesday, which is definitely going to be a leading indicator. But the current administration in Canada under the Trudeau administration has been absolutely disastrous. And at the current time, you know, it looks like we may not get a NAFTA deal. Canada has problems with that $1.5 billion pipeline that the Canadian Liberals have bought. That's turned into a disaster after that judge's ruling. So not a lot of things going well for the current government in Canada, and that absolutely is keeping the loonie under pressure. Now, the Bank of Canada could help that out, but I still feel that this is a headline-driven pair, and the NAFTA negotiations are going to dictate what the next move on this pair is, not just the Bank of Canada on Wednesday. So when we look at this right now, 132.06, we're closing the week at 130. So if we retake the 130, if we get above 130.26, this pair is likely going to come back up to a known verified resistance zone that starts at 130.90 and it finishes all the way up at 133.85. So a very, very stiff resistance zone up here. So if Canada gets a NAFTA deal, the Bank of Canada comes off a little more hawkish under the current economic situation, then US-Canada could plummet. So, but be very careful. If there is no NAFTA deal, US-Canada will retake the 132.50, 133 area very, very quickly. The indicators from VantagePoint are suggesting the latter, that this pair is going higher. Now, as we move into our other two main commodity currencies, Aussie US and New Zealand US, Aussie US is under significant selling pressure again, despite that move in the equity markets. But as soon as the equity markets, the S&P 500 more specifically, started to cool off and fail at that 29.17 mark, the Aussie responded to that immediately by selling off also. We've got a very heavy support zone down around this 71.55, 71.80 mark, right in that zone, but the indicators are suggesting we're going lower. This could actually be another leading indicator for the S&P 500 is getting ready to tank. So be very careful with this pair, but right now the sellers appear to be back in control here. Same as New Zealand, guys. We could have even better opportunity with New Zealand because we're much closer to this known resistance zone, a verified resistance zone. I will add to that. That's coming in at 67.26, excuse me. So we're likely coming back in to the lower part of this range down at 65.44. If we're going to turn back to the upside, that's where it's likely going to be. But once again here, guys, an excellent call from VantagePoint. If we take our short-term crossover off this resistance area, our medium-term crossing over our long-term predicted difference, when we combine that with our neural index, we have basically an instant winning trade, guys. When you're combining these kinds of powerful indicators together, not using these indicators in isolation, then you're really seeing the bigger picture here, because there's so many different indicators out there in the market right now, but they're all very, very similar in my respectful opinion. But right now it would appear imminent that we are heading towards 65.55. Now, once again, a holiday short week with Labor Day in the US and Canada. There's going to be no shortage of volatility to start the week. Now, once we're done summer trading, so a busy week ahead, but some very, very good opportunity coming our way. So with that said, this is the Forex Weekly Outlook for the week of September the 3rd, 2008.